again, I don't believe a 20 or 25% housing crash is coming, but if you do, that's fine. Just know there's stuff you should be doing now to get ready, to get creative, to think about writing creative offers. And again, if I truly believed that, and let's just say there was a 400K house that I wanted, and I believed a 25% discount was coming, you know what, Cody? I would write the offer at $295 today. Alrighty, folks, we are going to talk with a multi-millionaire who has built his wealth with real estate. We're going to do something a little different and a little odd. We are going to postulate, we are going to think, we're going to propose that a 25% crash in home prices is coming. The fact is it has already started, and we will see a 25% crash, let's say, over the next 18 months. Cody, if you knew in your bones that this was going to happen in your market, in your buy box, what would you be doing today to get ready for said event?
Well, if I knew for a fact, which is a big if, but if that was the case, I would be looking at two deal types. The first deal type would be, can I make any piece of property in my buy box cash flow on today's numbers with long-term fixed rate debt? That would always be the number one, because if I can get cash flow for a long period of time, the price is irrelevant. The second deal type I'd be doing, which I have done before, is the quick flips. One of my one and only flips I ever did, I bought it, and within 3 weeks, I was under contract to sell it for double the price I bought it for.
Oh my goodness!
So,
hello.
Yeah, bought it for $205, put a little bit of money into it, and within 3 weeks, I was under contract to sell it for $475. And I sold it to an off-market buyer that I had just happened to meet at that time. They worked in the real estate office I was working at, and they needed a house, so it worked out well for me. But those type of quick deals, if I knew things were going to go down, if I could find a great price and pick up a little bit of cash, I would do that. But the number one priority for me is always cash flow. So if I can still get it to cash flow, even if I know, my net worth's going to go down, as long as I have positive income, I'm happy.
Yeah. One of the things that's very interesting, because again, you're going into this 25% crash with a large real estate portfolio. And again, it's really, it's important, right? When you have these 30-year rate debt, and your property goes down 20%, it doesn't really matter. It kind of impacts your personal financial statement, might make you less lendable for the next deal, right? Because you don't have the asset base. But nobody's going to come take your property, right? Nobody's going to come take it because some artificial number is lower than it was before, which is awesome. The other thing I really sensed from your story, which is an important point, is you're not going to sit on your hands and wait 18 months. That's what I think a lot of people I see in the comments and videos, right? They are certain a housing crash is coming. I am not. I don't think this is possible, but I'm playing the game like it is for the moment. And they're all just like, I'm going to wait. I'm going to wait. That's not how wealth is built. You don't wait on the sidelines. If you, Cody, believed a 25% housing crash was coming in your bones, I know what you would do. You would be writing offers like the 25% discount happened today. You would just get ahead of the game. You would go for the discount today because they would help the numbers cash flow. It'd give you a long rate debt, and you're going to have less competition. As the market goes down, you have less competition because everybody is freaking out. So just rush, get the discount, write the offer, get told no, get told no, get told no. Oh, let's negotiate. That's you're going to be, you'll be more active now than waiting.
Yeah, or let's spin it the other way. Offer I wrote last week, which it looks like is going to go mutual and go to the closing table. There are some duplexes that are in a phenomenal area. They're side by side. They're probably worth $350. What I did is I went in and said, hey, look, finance it. I will pay the closing costs. They have no debt. I will just pay excise tax at title escrow, finance it with zero money down, 4% interest, 30-year AM, 10-year balloon. And for a kicker, this is not going to be for you. This is going to be for your kids. Let's put a 25% appreciation clause. So if this goes from 375 to 475, when I pay off this note, this is probably going to go to your kids, not you. They're going to get 25% of that net appreciation. That way, you guys get some income. I'm going to give you guys above market price. But because of that, and I'm going to benefit your future kids even more so than I'm benefiting you. You guys are going to take zero money down. And that gets me into a position where the assets are paying themselves down $1,000 a month, which on basically nothing down is great for me.
Oh yeah.
And for them,
Huge.
they're happy because it's more of a legacy for their kids than it is for themselves. They have more money than they ever need. So
Yeah.
you could try and hammer down price, but you could also swing it the other way and play to the, look, this is probably going to crash. How about I just get you above market, but give me these terms that work, that in most markets, nobody would ever accept that.
Yeah, this is why buyers markets are so powerful, is because you are the buyer always has the ability to get creative. And again, you can write opportunities like this, give kickers, give balloons, whatever it is, a lot more than a seller's market. In a seller's market, these things just fly off the shelf, and it's really hard to do. But in a buyer's market, you can get very, very creative with terms. You could figure out what's important to the seller, i.e. legacy in this case. Because again, they're not really interested in this, a couple of pennies here or there. But hey, if they can get a kicker for their kids that maybe is a surprise in a decade, all the better. And you're absolutely right. In a market that, again, we're assuming here is declining 25%, you know who knows that? Sellers. Sellers know that. Sometimes people have to sell. Now, if you are a seller and you don't have to sell, you're just going to take your property off the market and wait for it to come back. But if you have your property listed in a declining market, guess what? You have to sell. Death, divorce, job transfer, health, whatever it is. Right? One of the funniest things, or interesting things, I shouldn't say funny, one of the interesting things I remember from 2008, 9, and 10 in my buy box of Fresno, California, roughly speaking, 75 to 80% of listings were distressed, short sales, or foreclosures. Guess what, folks? The other 20% were just normal sellers that had to sell for some reason. So they were throwing on inventory in perhaps the worst market ever to be a seller because they had to sell. That would have been a perfect time to go to those 20% with creative offers, Cody, like you just said. Yes, I know it's a shitty market. Yes, I know you have terrible timing. Why don't we create an offer where, I can win today, but we'll give you a kicker if the market turns around? That would have been a genius move. I never thought of that. It's so creative.
Well, I actually got that idea from ChatGPT. I've been using that a lot more lately because it's an appreciation clause where you can share in some of the upside without them actually being a portion of the equity. They're just it's another benefit of being the debt.
It's on the debt, yeah.
Yeah, so there's some cool ways to do it. But my encouragement for folks, back to the conversation of would I wait 18 months? I would definitely not. If you're playing a game, even if the goalposts move, you need to shoot for the goalposts if you want to win. You can't just play defense forever. And some people are going to say, oh, well, I'm stacking cash so that I can seize the opportunity. You don't necessarily need to have as much cash as you think you do to do it.
Not in a buyer's market. Not in a buyer's market.
No.
Yeah.
So shoot where they are. Shoot where the goalposts are so you can actually get some goals and get some points on the board.
Yep. Yeah. So people are just so comfortable. Like I see it all the time in my comments, right? Oh, the crash is coming. I'm just going to wait. I'm going to sit on the sidelines. I'm like, yeah, all the broke people thought that in 2009, 10, 11, 12 as well. When I was out there and they were just gold bars were laying on the ground in the MLS. Nobody was picked because everybody thought they'd go lower. I got a house for $28,000, right? That was the cheapest we bought a house. We bought a bunch for 31 and 32 and 34 and 37. 28 turned out to be the lowest number. Technically, I think it was 28,500 was the lowest. Everybody thought they'd go lower. Dude, that was less than the lot value. What do you guys, really? We think they're going to go lower than that? That's crazy.
Yeah, but you saw it. It worked for your buy box, and so you bought it, and here you are. And they probably don't have as much as you do. Not that that's what it's about, but.
What I'm talking about is, folks, again, I don't believe a 20 or 25% housing crash is coming. But if you do, that's fine. Just know there's stuff you should be doing now to get ready, to get creative, to think about writing creative offers. And again, if I truly believed that, and let's just say there was a 400K house that I wanted, and I believed a 25% discount was coming, you know what, Cody? I would write the offer at $295 today. And the seller probably tells me to F off. I don't care. I think it's going to be worth $300. So I'll write it at $295. But you know what? I'll follow up in 2 weeks. In another 2 weeks, in another 2 weeks. And here's the deal, folks. Buyers make the market. Sellers have three choices. They could take it off the market, which many will. They can sell to somebody else, maybe, or they will sell it to you. Those are the only three options. So know your numbers, get aggressive. Money is made in the follow-up. Get creative. I love this appreciation clause. So much more. Cody, give us your final thoughts. Again, in this example, you assume a massive crash is coming. Tell us what you're doing in summary.
Well, in summary, I'm going to do what I always do is I'm going to buy for cash flow. So if that means I have to come in at a lower price or get a lower interest rate with sellers, that's what I'm going to propose. And I'm going to stick with my numbers, because if you stick with your numbers, like you said, if I stick to 295 and then eventually it comes down to 300, you're inspiring a lot of confidence that you know what you're doing with those property owners. And then that second piece is I'm going to do the quick flips. If I can get in, get out. I have long enough term debt where if I'm a little bit delayed on my project, I'm not going to just lose it, but I'm trying to get the quick cash so that if it were to happen, I'd have some dry powder to go make some plays.
I love it, Cody. It's going to be so fun to watch what you're doing over the next couple of decades, because you're crushing it now. I can't wait to see what you do in a buyer's market like we have now. I love the shared appreciation clause. Cody, you're putting all this on YouTube. Tell us where it's at.
Cody Davis Business Adventures, Tuesdays and Thursdays at 3 Pacific.
And don't forget, folks, Cody is confirmed for the Vegas event next year, Valentine's Day weekend. I think it's the 14th and 15th, something like that. I appreciate you coming out. Thank you for being here each and every week, Cody.
You bet. See you next time.